Welcome to this session of the Skilled MBA Case Study Series, where we explore innovative impact investments. Today's case, Nuveen and the Galápagos Marine Bond, examines how a debt-for-nature swap was used to finance conservation while managing sovereign debt. How does this $163 billion transaction benefit both investors and the environment? What are the financial risks and rewards associated with this unique investment? Can sustainable finance reshape global conservation efforts? By analyzing Nuveen's role in Project Darwin, we uncover key lessons in financial structuring, environmental impact, and risk management. Let's begin. Project Darwin is the largest debt-for-nature swap in history, leveraging financial innovation to support marine conservation. $1.63 billion in Ecuadorian bonds restructured into a $656 million loan. $323 million directed toward Galápagos marine conservation over 18.5 years. Aligns sovereign debt reduction with environmental commitments, benefiting both Ecuador and global conservation efforts. This transaction demonstrates how finance can drive environmental impact. Several players played critical roles in structuring the deal. Stephen Liberatore, Nuveen, leading Nuveen's impact fixed income investment strategy. Credit Suisse, structuring and presenting the financial opportunity. Ecuadorian government, partnering in the debt-for-nature swap. Conservation organizations, overseeing marine protection commitments. Each stakeholder ensured the deal balanced financial performance with conservation impact. This investment posed three key challenges. 1. Financial returns, ensuring the bond delivers appropriate risk-adjusted returns for investors. 2. Environmental impact, verifying measurable conservation outcomes for the Galápagos marine ecosystem. 3. Risk management, addressing geopolitical and economic risks in Ecuador. These factors required careful financial structuring and due diligence. How did Project Darwin work? Original debt, Ecuador's $1.63 billion in sovereign bonds, was the starting point. Restructuring. The debt was converted into a $656 million loan with new terms. Conservation funding, a portion of the savings, $323 million, was allocated to marine protection efforts. Environmental outcomes. The deal expanded marine protected areas in the Galápagos. This model represents a financially sustainable way to drive conservation. Analyzing Project Darwin's strengths, weaknesses, opportunities, and threats. Strengths. Largest debt-for-nature swap ever executed. Aligns with Nuveen's sustainable finance goals. High potential for long-term impact. Weaknesses. Complex valuation and execution process. High due diligence requirements. Opportunities. Positions Nuveen as a leader in sustainable finance. Creates a model for future conservation finance deals. Threats. Geopolitical risks in Ecuador. Regulatory uncertainty and enforcement challenges. Mitigating these risks was critical to ensuring the success of the deal. Debt-for-nature swaps have evolved over time. 1980s, concept introduced as a conservation finance tool. 2010s, successful marine conservation swaps in Seychelles and Belize. 2020s, renewed focus on sustainable finance, leading to Project Darwin. 2022, the largest debt-for-nature swap in history is executed. This transaction builds on decades of financial and environmental innovation. Project Darwin aligns with key impact investment principles. 1. Measurable outcomes, ensuring quantifiable conservation and financial returns. 2. Competitive returns, delivering risk-adjusted financial performance. 3. Intentionality, driving deliberate positive change through finance. By integrating these principles, Nuveen ensures both impact and investor confidence. Why is this investment critical? Biodiversity hotspot. home to unique species found nowhere else. Evolutionary significance, a living laboratory since Darwin's time. Economic importance, supports local livelihoods through sustainable tourism. Protecting the Galapagos is both an environmental and economic priority. Nuveen had 3 strategic options. 1. Proceed with investment high-impact potential and enhanced brand positioning. Exposure to geopolitical risks. 2. Decline investment avoids complex financial and regulatory exposure, misses a pioneering opportunity in sustainable finance. 3. Modify structure balances. Impact goals with financial risk mitigation. May cause delays due to renegotiations. Nuveen needed to assess the risk-reward balance carefully. Nuveen used a structured risk framework, financial risks, valuation uncertainty, and return volatility mitigated through stress testing. Political risks, government stability, concerns managed through international oversight. Environmental risks, conservation enforcement issues addressed through independent monitoring. Reputational risks, greenwashing concerns mitigated via transparent reporting. This approach ensured a well-structured, risk-adjusted investment. Before committing to the investment, Nuveen conducted an extensive due diligence process to ensure both financial viability and conservation integrity. 1. Financial analysis, evaluated bond structure, pricing, and expected returns. 2. Impact assessment verified conservation metrics and monitoring mechanisms to ensure measurable outcomes. 3. Geopolitical review assessed Ecuador's economic and political stability to anticipate potential risks. 4. Stakeholder engagement, consulted with conservation experts, local communities, and financial regulators to align interests. This rigorous process ensured that the investment was not only financially sound, but also aligned with Nuveen's impact investment principles. To safeguard the long-term success of the Galápagos Marine Bond, Nuveen and its partners established a strong governance framework. 1. Legal framework. Binding agreements ensured that conservation commitments were legally enforceable. 2. Oversight Committee. An independent monitoring body was created to oversee fund allocation and conservation progress. 3. Reporting requirements. Regular financial and environmental performance updates were mandated for full transparency. 4. Enforcement mechanisms. Clear consequences were defined for non-compliance with conservation commitments. This governance model helped maintain investor confidence while ensuring that conservation goals remained a top priority. The Galápagos Marine Bond represents a pioneering effort to align financial investment with marine conservation. Let's explore the projected outcomes of this initiative. 1. Protected marine area, 133,000 kilometers sounds. This bond facilitates the expansion of conservation zones in Galapagos waters, enhanced protection of marine biodiversity, including sharks, turtles, and coral reefs. 2. Funding duration, 18.5 years. A long-term financial commitment ensures continued efforts in marine protection and enforcement. Funding will support scientific research, sustainable fishing policies, and local conservation programs. 3. Conservation investment, 323 million. This substantial funding will be channeled directly into marine protection initiatives. It will strengthen enforcement against illegal fishing, support ecotourism, and promote sustainable development for local communities. Based on the analysis, Nuveen implemented the following key recommendations. Comprehensive risk analysis. Conduct a thorough assessment of Ecuador's economic landscape and bond structure before finalizing investments. Governance safeguards. Strengthen enforceable mechanisms to ensure conservation commitments are met. Strategic positioning. Leverage this investment to reinforce Nuveen's leadership in sustainable finance and attract more ESG-conscious investors. Impact monitoring. Implement regular reassessment of investment impact and conservation outcomes to maintain accountability. By aligning financial innovation with environmental impact, Nuveen successfully demonstrated how private capital can drive large-scale conservation efforts while ensuring sustainable returns. Thank you for joining this session of the Skilled MBA Case Study Series. We now open the floor for questions and discussion.